The type of mortgage rate that is best for first-time homebuyers depends on their individual financial situation and preferences. However, in general, fixed-rate mortgages are often recommended for first-time homebuyers because they offer more stability and predictability in terms of monthly mortgage payments. With a fixed-rate mortgage, the interest rate remains the same for the entire term of the loan, which means that the borrower's monthly mortgage payments will remain the same as well. This can be beneficial for first-time homebuyers who are still getting used to the responsibilities of homeownership and may not have a lot of experience with budgeting for housing expenses. In contrast, variant-rate mortgages, such as adjustable-rate mortgages, ARMs, can be more unpredictable and may result in higher monthly mortgage payments if interest rates rise. While variant-rate mortgages may offer lower initial interest rates, they can be riskier for first-time homebuyers who may not have a lot of experience with managing their finances and may not be prepared for potential increases in their monthly mortgage payments. Ultimately, the best type of mortgage rate for first-time homebuyers will depend on their individual financial situation and preferences. It's important for first-time homebuyers to carefully consider their options and work with a trusted mortgage lender to find the mortgage rate that is best for them. If you are considering a mortgage with a variable rate, there are several important factors to consider in detail before making a decision. Interest rate fluctuations. With a variable rate mortgage, your interest rate can fluctuate over time based on changes in market interest rates. This means that your monthly mortgage payments can also fluctuate, which can make it more difficult to budget for housing expenses. It's important to consider how much your monthly payments could increase if interest rates rise and whether you would be able to afford those higher payments. Risk tolerance. Variable rate mortgages can be riskier than fixed rate mortgages because of the potential for interest rate fluctuations. It's important to consider your risk tolerance and whether you are comfortable taking on the risk of potential increases in your monthly mortgage payments. Loan term. The length of your loan term can also impact your decision to choose a variable rate mortgage. If you have a shorter loan term, such as a 5-year term, you may be able to take advantage of lower interest rates with a variable rate mortgage without worrying too much about potential interest rate increases. However, if you have a longer loan term, such as a 30-year term, you may want to consider the potential risks of a variable rate mortgage over such a long period of time. Caps and limits. Many variable rate mortgages come with caps and limits on how much your interest rate can increase over time. It's important to understand these caps and limits and how they could impact your monthly mortgage payments if interest rates rise. Payment flexibility. Some variable rate mortgages may offer more flexibility in terms of making extra payments or paying off your mortgage early without penalty. It's important to consider whether these features are important to you and whether they are available with the variable rate mortgage you are considering. Overall, if you are considering a mortgage with a variable rate, it's important to carefully consider these